Hey everyone, welcome back to Upside Down Data. Today I want to talk about Quant and what some of our models are making of its recent price action. So last year, Quant was an interesting asset to watch. It fell off pretty hard going into kind of the first half of 2022. But then it had a pretty major bounce from June all the way through to October. It was about a 450% move to the upside over here. And now more recently, it's just been kind of consolidating sideways. We fell off, had a bit of a run early this year, and now have been kind of cooling off. So what does this mean when we think about Quant's longer term prospects? And so to talk about that, I want to flip over to our long-term upside downside potential indicator, our risk model that we have here at the channel. So I'm showing you this on our website, polaritydigital.io, which we launched in collaboration with Jay over at Daily Crypto Analysis. Recommend checking his channel out if you haven't already. Link in the description, and the link to the site in the description as well. So this model is a risk model. So higher levels mean higher risk, lower levels mean lower risk. It ranges from -5 to 5. And so you can see is that at the top here in September of 21, we got all the way up to basically the top of the range here for the long-term EDPI, maximum risk. Then indeed we ended up going into the bear market. But then I think what's more useful to look at is what's been happening since. So in this kind of big string of outperformance relative to a lot of the rest of the market, these big explosive moves to the upside, risk had actually gotten a bit elevated for Quant at that point, getting up to 1.3 here, about 1.13. And at the time when this was happening, I was saying that it was likely that this right here was likely to be the top of the rally, because when you're seeing risk levels this elevated, especially when a lot of the rest of the market was at way lower risk levels, that tends to suggest it's an anomaly, that it's going to revert back to the mean. And indeed, we've seen Quant kind of cool off from that point. And then more recently now what we're seeing is it really kind of falling back to these lower risk levels, kind of the same general levels we saw back through here, and also some of these levels here, for example, back here before this run up in the beginning of this year. And so if we're just looking at this from a long-term perspective, then, I think we're looking at a reasonable risk-reward perspective from the model. What the model sees is a reasonable risk-reward in the current moment. Certainly going lower is not out of the question. We already did it back here. We've done it before in the past. And so if the broader markets get more bearish, things fall off further, would not be shocked to see that. But I do think that where we're getting into is historically been a relatively good value zone for Quant. If you just look at the previous times we've been at these levels, it's generally speaking been a reasonable acquisition time, especially in light of what ended up happening here. Whereas getting up into these higher elevated points that we see throughout these points, less so. And so certainly we're not at that position yet. And if we just compare where we were back at the last half of last year to where we are right now, the model thinks there's a lot better risk reward now in the long term. So this is kind of months to multiple months to years time frame is what this model is caring about. Certainly we're looking at a reasonable place here. And so it wouldn't surprise me if this keeps bleeding off, but also wouldn't shock me if we start forming a base somewhere at these risk levels, something like we did back here, for example, or over here, before being able to move to the upside if broader markets allow, if we actually get some more bullish movement. Because again, what I think is going on right now in the market is that we're kind of getting into the boredom phase where people are just kind of checking out. They don't really care all that much. And so price just kind of grinds along without anyone getting all that interested or all that exciting. But that's not going to last forever. At some point in the future, we're going to have a dramatic move one way or the other. And then I think if we end up having been the case that we're getting towards the end of this bear market, it's reasonable to think that a bullish move could be one of the things that could follow. This model certainly thinks there's more possible room to the upside than the downside, but obviously we have to keep an eye on it. If the stock market falls off a cliff, if we have a massive recession, all bets are off. Downside is certainly plausible in that perspective. But I do think that if historical patterns repeat, historical patterns continue to play out, and if we avoid those kind of tail risks of some really extreme event happening in the economy or something like that, I would think that a move to the upside is more plausible from where we are right now than a move to the downside. So not financial advice, obviously, that's where I sit right now. But again, we're in that boring part of the market. This does not mean this has to happen immediately. It could take a lot more boredom, a lot more sideways chop, and just kind of a big range before finally being able to establish a bigger trend that could bring us to higher prices. So that's kind of my long-term outlook, is that for Quant, I think it sits in a reasonable long-term risk-reward perspective. And then, of course, this is all assuming that you think Quant is going to be able to put in some decent performance in that next bull market. So if your thesis about Quant is that it has strong fundamentals, you'd like to see those fundamentals continue to strengthen to be more certain of that. If your thesis is just that Quant will garner a lot of speculative interest in the next bull market, have to evaluate that thesis as well. Are the things that you think will give it that speculative impulse still intact? Are they still there, or is some other newer asset just going to steal the limelight and run instead of Quant? So those are separate questions that you always have to consider. But assuming that the conditions will be there for Quant to do well in the next bull market, then the question is just when are the good accumulation ranges? And this model right here is suggesting that right now might be one of them if that were to play out. Okay, so that's more the long-term kind of outlook and things to think about. Let's talk about the shorter term perspective here. So I've just flipped over to the short-term version of our upside downside potential indicator. This cares about moves that play out over days to weeks, much shorter in its time preference. And so what you can see here is that the short-term UDPI has been treating this kind of -2 range as local support for a while, really ever since we've gotten down to these June lows. We bounced off of it here, bounced off of it here, bounced off of it here for a bit of upside, and then again here. This rally launched off of similar levels, and we're back down to those kind of levels again here. And so that's where, if the market decides in the short term to get a bit more exciting, again, we're in that boring phase right now, so there's no guarantee this will happen. But if we get some volatility, then it seems reasonable to think that we could see some upside volatility from here. But just like we've seen in these past rallies, that's not meaning we're going to go break off to any new highs necessarily. It could just mean that we go from the range low up closer to the range high, maybe even back to these levels up here, or all the way back up to these levels up here. Depends on how big of an impulse we would see. But it wouldn't surprise me if we see this act as support again, like it has really ever since June of 22, from this point move back to the upside. But I don't think Quant's going to do that by its own. I think we're going to need Bitcoin and some other assets to put in a move before we might start seeing altcoins start to catch up as well. But for now, I think it's the way that I'm looking at this is that the conditions are there for that to happen, but we need to see that impulse first before we get too excited. I think that this is kind of one of those situations where the conditions can be there, but if the impulse never comes, those conditions don't have to be realized. But if we see that impulse, we could see a pretty decent move to the upside. And certainly, you'd be more optimistic with the short-term UDPI being down here for a decent move to the upside than it being up somewhere like here. So another thing I'm looking at also to in the short term, just think that maybe some at least short-term upside could be plausible, is our trend confidence indicator, TCI. So if you're not familiar with this this indicator, it's trying to quantify confidence in the given trend. So how confident should we be that we're in an uptrend or in a downtrend? And one of the things that this model can be really useful for is looking for divergences. If you're seeing price shooting to the upside, but then you start seeing the TCI trend downwards like we saw through here, that can be a warning sign suggesting that a correction is coming, and that's what we ended up seeing here. But also vice versa, when you start seeing the TCI start moving to the upside, with price even kind of moving sideways or moving to the downside, that can be indication of some positive movement to come. And what we've been seeing here more recently is that we put in a kind of a local low back in March of 23 on the Quant's TCI. Price has been trending downwards since, but the TCI has been trending upwards since then. And what that might suggest is that, again, the conditions might be there for some positive movement. And so there's some confluence right now between the short-term UDPI being at these similar levels that we've seen as staging grounds for rallies in the past, and also the TCI suggesting that kind of confidence in this downside is waning, is reducing. And right now the model is relatively undecided. It thinks that things could really go either way from here. And so that's where I think that the conditions are there in the short term for Quant to put in a reasonable move to the upside. Again, not necessarily breaking up to new highs, but at least getting back up to maybe the range highs. But that's all conditional on, risk assets again becoming attractive and people putting money in. I think with the debt ceiling issue going on right now being negotiated, there's a lot of uncertainty in markets. So I think people are really kind of sitting on their hands, not wanting to make any big plays. But once some of that uncertainty gets resolved, it's possible then we might see some shorter term movements in the markets. And it might depend how that debt ceiling issue is resolved. If it's resolved in a way that the markets like, then I would expect these bullish things I've been talking about in the short term to potentially play out. If it resolves in a very negative way, like let's say the US defaults on its debt and it's a whole mess and it's not resolved easily, that could actually see things go the opposite way and things really to fall off. And so that's why I'm talking about conditions. I think the conditions are there in the short term for positive movement, but we really need to see some of those other factors play out in a way that allows those conditions to play out. And that's what I'm looking at with Quant right now. So overall, my thoughts with Quant is that I think it's in a reasonable place long term. But again, all of that's conditional on the thesis that one has for Quant. If one thinks that Quant is strong from a fundamental perspective, you'll want to keep evaluating that thesis. I've talked about this over and over and over again. Theses are meant to be questioned constantly. One of the most dangerous things that you can do in crypto is get married to an asset and never consider whether or not your thesis is wrong. And really the idea here is that the market doesn't care how much you love an asset or how much you love a project, how much you believe in it. The market's going to do what it's going to do. And so if we just blind ourselves to what's going on, that's really problematic. And so that's where with something like Quant or any altcoin, you want to think about how is it going to do in the next bull market? Is it going to, first is it going to make it there? Second, is it going to do well? You'll want to think, what are the things that would make it do well? Is it really strong fundamentals that drives a lot of adoption, that drives a lot of interest, and then speculation on top of that? Well, then you'd like to see those fundamentals continue. And so that's one of the things with Quant. I think a lot of people love it from a fundamental perspective, something to keep an eye on going forward if it continues to meet its promise or if it starts to fall off. And I'm not picking on Quant in specific here. This goes for any altcoin, in my opinion, that they're not guaranteed to do well in subsequent bull markets. And so it's really about identifying which ones are meeting those conditions needed for it to do well in the future. So that's kind of one of the more kind of fundamental analyses. But then given that, if you think that Quant is meeting those things, then from its long-term UDPI perspective, its long-term risk perspective, it's looking favorable. And short-term, the conditions are there for some bullish movement. So none of this is financial advice, of course. Make of these data as you will, but that's what I'm thinking about with Quant right now. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. A lot of updates, better indicators, and more over there. And also check out partydigital.io, where we have our models for Quant and more.